Hey, wanted to let you know that your credit score is more important than it's ever been before. FHFA, which is the organization that dictates how loans are securitized for Fannie Mae and Freddie Mac, which is over 80% of the loans in America today. Um, they've made some dramatic changes to how we price loans and how the interest rates are set up for your loans. And much of that is based upon credit score. So I wanted to show you really quick some of these potential changes that may affect you this spring and why now is the time to get on top of this so you aren't adversely impacted by these changes. So let's go ahead and take a look here. I got this big fancy chart up here, but it's actually fairly simple. On the left-hand column, you see where my mouse is, that is going to be your credit score, okay? And then across the top is the loan to value, or how much down payment we have on the house. And we're just looking at purchase loans. And so let's go to this fairly popular bucket that we deal with is people that are putting 20% down. So that's going to be 75 to 80% loan to value. Now I'm going to start down at the bottom here where I've got somebody that's got a 719 credit score. And for a long time, that's been a fabulous credit score. But Fannie Mae and Freddie Mac are making some pretty dramatic adjustments for having that credit score versus having that 780 credit score. So let's take a look at what the difference is. 780 credit score, I've got a 0.375% adjustment, or at the 719, I got 1.375 adjustment. Now, what does that mean in lay terms? Well, there's a difference between those two of 1%. So if you had a $300,000 loan, the cost to your loan would be $3,000 more if you've got the 719 credit score versus the 780 credit score, okay, or a 781. And then if we wanted to kind of change that over to what's the effect on an interest rate, your interest rate's probably going to change by about 0.3% higher, or a 0.5% higher, kind of dependent upon the market on the day when you're looking at locking. So again, dramatic changes from 719 up to 780. A lot of times we see that it's a very simple fix to move somebody from that 719 up to 760 or 780. So what I really want you to do is reach out to me early, not later this spring. So we've got some time to do some of those fixes that we would need to do to get you up to that 780 score. Or if you're a 650, we can get you up to a 720, because again, those are big dramatic differences that you see yourself moving up that scale. So in summary, now coming up this spring, they've made changes, and it's dramatic changes that haven't happened in the past, and it's going to affect the costs of your loan. And it's not just me at my company, it's everybody across the country. Every mortgage originator, every mortgage company is going to be using this same chart to figure out what your interest rate is going to be this year. And it is definitely going to be affected. And one last piece that's going to be affected is the debt to income ratio. And we'll be looking at that also, because now if we're over 40%, there's an adjustment there too. So reach out, let's chat, make sure we plan ahead for your purchase this summer.